I sold all my soybeans.
Hi again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Always a pleasure to have you with us. I am joined once again today by David Kruse, the founder of Comstock Investments. We are going to take a look at the situation for the ag commodity markets here in 2025. Wow, that was a bumpy ride in 2024, David. We had a lot of money taken out of the grain markets, lost a lot of value there. On the other hand, you had livestock that gained a lot of value in 2024. And now it seems like 2025 is just real bumpy to get things going here this year. There seems to be a lot of confusion about what the grain markets may do. Now, they had a rally toward the end of 2024. Do you think that that was about it, or can we build on that? What's your take?
Well, let's take the overview for a bit. First of all, one of the things I noted at the end of 2024 was that there was, or even probably since August of 2024, was there was divergence between corn and soybean markets. The corn market was progressively stronger than the soybean market. The soybean market did make a new low in December, and the corn market did not. And the corn market, as we were taping this at least, is near the highs of the year for January. The next benchmark that we need to see is what the January highs and lows are. There's an old rule or whatever that in February, whichever the highs or the lows made in January are taken out, has often been the trend for the year. We don't have those highs set yet. We've got a crop report that's still to be, or the annual crop report to be released before we can see those highs, and in time we'll have to tell there. But we've got an awful lot of other factors that are not typical that we have to deal with, such as both the trade and this deportation situation with the immigration. Both of those could be market rocking events, however they unfold. I guess as we look ahead, I'm at this moment, as we're taping this, I am still somewhat friendly corn. The reason of that is probably where I live. I'm in the Western Corn Belt. My observation this year is that both in general the yields and have been a little less than the Western Corn Belt, and demand has been really strong. And I think people missed in the December WASDE report the USDA said actually that our carryover for corn was a little less than the prior year. Well, that means that, remember earlier we talked about all the terrible demand that we had and all this record corn yield we're going to get, and we actually did not, I believe, if they'll confirm that in the annual report, increase the corn carryover. That means we need another corn crop, and where we're at, this has been reflected in basis. We've spent much of the year 30 cents over with our ethanol plants in the western here, we're northwest Iowa, and where they'd be that much or more even under in the Chicago Board of Trade, on some of the river export markets there earlier. We've been moving corn basically from the Eastern Corn Belt, where the yields were exceptional, to the Western Corn Belt, where the demand is. I believe we have less stocks today in the Western Corn Belt than the year before. And as I said, I think we're going to grow a lot of corn in the Western Corn Belt this year because of the basis. We don't see that in soybeans where we're at. We're 50 cents under on a good day over here. And so I know our operation will be planting more corn this year. Probably should be planting all corn. As I look ahead I've been studying the cost and structure and such, and I actually think we could make money on corn in 2025 with our basis. Where we live. Maybe if I was a farmer over in Illinois, Indiana, I'd have to be more cautious about saying such a thing like that. But here that's where we're at. But so I'm actually entering this year with a little bit of optimism, unless one of these ulterior things, such as the tariffs and other things, blow it all out of the water. Our supply demand situation is really not too bad. We still have about a third of our corn left to sell, and I'd be inclined to maybe do some hedges on strength here, but I want to be my basis open on that. It would be purely a hedge and not a full sale. I think we get up here if we can get futures up to 470 on some of these contracts, and I can get a 30-cent positive basis. That's $5 corn. gosh, I broke even for 2024 at that. If we got that done, I can't come close to something like that in soybeans. We've gotten rid of our soybeans and good riddance, and I will be looking at planting fewer of them in the future.
Have you been able to tell what the trends are on the input costs this year for farmers?
Yeah, they'll moderate slightly. I think that next year's break even will probably be around 460 for corn, and probably a little better than $11 for soybeans. When I throw our basis is here in the Western Corn Belt onto that, corn blows soybeans out of the water. A lot of people or analysts, when they compare the price of corn and that ratio to soybeans for which crop is favored, they use Chicago. Well, but over here we're 30 cents over, and over there they're 40 cents under sometimes. You got to throw the basis into it, and when you do that, it shifts it to corn. I believe in a significant way. Now, until we actually raise a crop and we start building some stocks here, which we are not done in the Western Corn Belt, we have very strong feed demand. Maybe we've got a few lesser numbers, but we've compensated for that with record weights. And as I've been iterating about in previous commentary about, the ethanol prospects, if we could get Washington cooperate, they're very good, and we could see significant improvement in corn demand to ethanol. And so that's the direction we need to go. And some of that needs to be done to compensate for the risks in the world trade situation that we face.
I know last year, in some cases, the crop insurance kind of came to the rescue. The price guarantees this coming year, though, are probably going to be quite a bit lower, aren't they?
We'll see. We'll see how much lower they are. Obviously, they'll likely be somewhat lower, but there's some ways to assuage that too. But you mentioned this last year. I had 77 acres of prevent plant corn, and that was the most profitable in crop that I had. We endured a lot of flooding over here, and my corn yield was 19% below my APH. And so I ended up with a revenue crop insurance claim on that part. So that is still our number one risk management tool. The farm bill's been worthless. Honestly, they've got the reference prices set so low. We have a recession in agriculture, and the farm bill doesn't even kick in, with any price support. So it's worthless, and all they did is extend it. And so I guess we did, from that standpoint, I suppose they could find ways to warrant this new subsidy check. But be honest too, if you really analyze where the farm finances are, it didn't probably justify it, in my opinion. I don't think we're to a farm crisis yet. It was going to take another year to get us there. But and so let's hope it doesn't happen, and that way the politicians got a way to tell us that they helped us out, and I guess the farm organizations can pat themselves on the back that they brought us some money. I can't complain about government subsidies. I've farmed for 51 years, and I know you farmed for a while too, and I think probably you and I have both cashed an awful lot of government subsidy checks. And so I'll take them when they come, but I would much rather get it from the government. And there's things that we're not doing that could help shift that trajectory of support from government, so we didn't have to take cash from the taxpayer.
I always look forward to your experience and your opinions on things, and the way that you can look at things. I mean, you've had a lot of years of background in ag commodity production and also in marketing here. But I guess looking at it with what we know now, what do you think the farmers in 2025 should maybe be most cautious about? What are the biggest pitfalls, or like I like to call them, landmines, are out there that would threaten a farmer? What should they stay away from, in your opinion?
The problem is so much of it's out of the farmer's control. I think the greatest pitfalls that could befell us this next year are the trade issues, how the tariffs unfold. We've seen the dollar strengthen in the fourth quarter of this last year. And that is because that if we throw tariffs on people, their currencies tend to weaken against the dollar. And so that works against us. How the tariff thing unfolds, is going to be it's a wild card that it's unpredictable until it happens. They say all this is going to happen on day one. I guess we have to have another program here on day two to try to see what the result was. The other thing that really concerns me is the immigration issue with the deportation issue. If you always got to take the campaign rhetoric with somewhat of a grain of salt, but there's a tendency to move toward pragmatism when push comes to shove. But if they did what they said, and trucks or buses, I guess, pulled up to the packing plants and really certified who had valid papers and who didn't, and essentially all of the contribution from this immigrant labor throughout our food supply chain, it would almost collapse one day if you removed all these people all at once. And so you hear things like, well, they want to get rid of the crooks and the criminals and the bad eggs and the gang members and all that. That's all fine, but if you, how deep are you going to go with that? I mean, the dairies basically are run by illegal immigrants. The hog operations are, the packing plants are, all the apples are picked by, and all the fruits and a lot of the vegetables are planted and grown, and it's like half of the U.S. ag base is and so it really surprises me to some extent that recognition quite hasn't been accepted. The campaign rhetoric has prevailed, and there's going to have to be a resolution between those two things that happens here in the next short period of time, and that could be just hugely disruptive. And if we disrupt where now, why did Trump get elected? Well, it was because of inflation and the lack of ability to control it. Well, everything we've talked about here is super inflationary. If we upset the U.S. supply chain for our food, the price is going up on everything, more so than we've seen. And so that leads me to believe that there will be some pragmatism and some moderation that makes sense that comes into this thing.
If that's the case, how do farmers protect themselves against that then this year?
Well, I sold all my soybeans, so I'm just forgot about them, and I got 20% of the new crop, fewer new crop that I'm going to grow, hedged. So I went more to corn because the corn market where we're at, actually the export situation has much less impact on it. Our regional demand is all ethanol and feed, but that doesn't protect us either, because these tariffs are going to impact meat exports. The same way. And then someone said that, well, Trump is only going to put tariffs on items of national security. Well, that's fine, but it's going to be what they retaliate against that is what we need to fear. And in other words, he's not going to put tariffs on soybeans or anything like that, but they will, because they know that's his primary constituent is farmers, and that if they hurt the farmers, they hurt him. And he's in last time, we look at the last record of what happened. We lost China as our primary ag customer because of Trump tariffs. He did compensate us something for that at the time, but we didn't get long-term compensation. They're not back, and they're never going to be back. We've lost them. Well, what did we do? We went out and we worked, and we created some new customers. Mexico then became our number one customer for our ag products. And we've got, of course, South Korea and Japan, the Philippines, and everything. And you'll notice that in the last 3 months, a lot of our exports have been going to Mexico, Japan, the Philippines, South Korea. Why? Because they figure they're next. And they wanted to build inventory ahead of the time frame when these things, they call it front loading, is what they do. That concerns me too, on that aspect of it. Mexico is at the top of Trump's list for a 25% tariff. Where are we going to go next for our ag export demand? And I know they say they're going to help us out, but it won't be enough, and it always comes late. This disruptive period we're entering is unprecedented. Never seen anything like it in our lifetime. And we'll see. I mean, and tariffs are a key component of Trump's overall policy. He wants to lower taxes, and essentially he's looking to how are you going to pay for that? Tariffs is his idea. And so this will be an interesting experiment.
You mentioned that you think soybeans are going to take a back seat to the corn. And of course, the 800-pound gorilla in that regard is the fact that South American production just continues to expand.
Yeah.
I mean, they just keep cranking out record production every year after year after year.
Yeah.
And I don't see any end to it. Do you, David?
I don't. And they've also, China's made major investments in Central and South American ports. And even to the point of building a road west that goes west through Brazil to a port in Peru that they control. And so then they don't even, so if we take the Panama Canal, they don't even, they can move their stuff out the port of Peru that they own, you know. And by the way, China owns 3 of the port sides on both sides of the Panama Canal. So, that's a whole nother subject or report or program that we could get into. But they have made huge investments in infrastructure in South America with the idea that long term they cannot depend on us, and so they're in everything they're doing. Even they've been exploring and developing in the Arctic with the idea of not having to use the Panama Canal too. They're one of the primary ones there. Another program, I guess, sometime down the road. So we've got lots of stuff to talk about here.
Yeah, we do. That's for sure. Well, we'll see how the weather shapes up this planting season. Hopefully, we come through it a little better than last year. Of course, like you said, last year in the northwestern Corn Belt had a lot of flooding. And I assume we won't have back-to-back years of that, but we'll have to wait and see. Thanks for talking with us, David. Always a treat. I appreciate that a lot. David Kruse, the founder of Comstock Investments, with us today. And thank you again for joining us. For producer Brianne Jenkins, I'm Marlin Bohling. We'll catch you next time here on the Comstock Channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.